We're here to talk about the things that people don't want to be honest about, or hard truths.
Those things like finance, relationships, love. On this first series, we're going to be talking about money, how you manage your finances, and how you grow wealth.
When people look at you like you're stupid, and everyone looked at me like I was stupid, he goes, who do you think in this entire office has scored the highest score on the Series 3? And he turns and he goes, she did. And I was like, what?
And for the first time in my life, I realized that you can actually make money by getting other people to give you money rather than you giving other people money. I wish I could talk to myself 20 years ago, because there are so many lessons we can learn in life.
Life lesson 1, be on time, be prepared.
Hi guys, welcome to the first episode of If You're Being Honest. My name is Amanda and I've got my BFF here, Madeline Cohen. And it's our first episode of If You're Being Honest. And the reason we decided to do this is because we want to know if you're being honest about those things like finance, relationships, love, and, all the things in life. Oh, did she just say that word that starts with an S?
Surgery.
Anyway, on that note, Madeline, why don't you tell?
Hi, I'm Madeline Cohen, or Maddie, as some friends call me. And thank you for joining us in the first podcast. I'm a newbie to podcasts, so I could be probably better scripted. And you might see Amanda looking a little cross at me from now and then because I'm not following the script. But we actually... we're walking around, we're talking, and she said, I really think we should do a podcast. You have this background in finance, and we have a lovely friendship and energy, and she wanted to kind of share that with you. She's got she's great motivational energy. I'm a little more reticent, but we're here to talk about the things that people don't want to be honest about, or hard truths. And the first episode is money. We're going to talk about money, how to get more money.
A lot of us feel ashamed about talking about it. And Maddie, being from a finance background, I said, why don't we do a show? Why don't we educate women on how to manage money, how to grow businesses, how to achieve their goals? And she's like, yeah, that would be a good idea. But we can talk about a lot of things. We can talk about divorce. We can talk about, budgeting, pregnancy. And then we just decided on this first series, we're going to be talking about money, finance, how you put your finances together, how you manage your finances, and how you grow wealth. So that being said, I guess we should explain why we want to share our stories and why we are here. And my personal motivation doing this is I wish I could talk to myself 20 years ago, because if I knew who I was 20 years ago, if I knew what I knew now, trust me, I probably wouldn't be sitting in this seat trying to tell you this. But there are so many lessons we can learn in life.
Yes.
About finance and money and stuff. So as I was saying to our audience, this is our first episode. And why don't you tell them a bit about yourself?
So I started my career in New York, and I didn't study finance. It was just the only job I could get. And it was as a trading assistant on a commodities and futures trading desk. And it was really overwhelming. It was I didn't even know. I said, and people looked at me, and everyone who ever starts a new job, when people look at you like you're stupid, and everyone looked at me like I was stupid, they literally said to me, think of it this way: a pair of shoes, you want to buy them low, and if you had to sell them for a high price, that's what you want to do. That's how they explained it to me. And I said, wow, they must really think I'm stupid. And that's fine. And we had to take something called a Series 3. In the US, that's the commodities exam. The Series 7 is for stocks. So I went and I studied and I studied and I studied, and I knew how to study because I just finished university. So I studied. And the office manager came out one day, and we were all sitting on the desk, and he said, and even the traders, that everyone, and it was open plan, all these desks are open plan. And he said, and this is at Prudential Securities in New York. And he said, he goes, who do you think in this entire office has scored the highest score on the Series 3? A 98% for the entire career. Everyone has been taking a Series 3, and everyone's looking around. And he turns and he goes, she did. And I was like, what? Everybody looked at it. And their faces showed like, her? It was like a little insulting. But still, I was like, oh, okay, I'm on my way. I studied for this. I got this. Still didn't know all these terms. And then, but there I started. That's how I started. And And it was, I'll admit to it, I went and I cried at home at night, and I cried before I went through it. I kept going. It was the only job I had. I didn't really have much choice. So there I was. And, life lesson, jobs teach you how to get along with people you're not necessarily want to get along with. You have to, you just go and you do it. And people surprise you and you make friends. And there I was. So I started my career there, Prudential Securities Desk, and then pretty soon, the person who worked in asset management, structuring portfolios, non-correlated portfolios, we'll get to that in a minute, but that person quit. And my boss said, actually, you know what? You can do it. And I said, What? I said, I don't know anything about a standard deviation. I don't know what these sorts of things. He said, you can do it. And because he had faith in me. I didn't have faith in myself. And I said, teach her. She can do it. Teach her. And she's smart enough. She'll get it. And I said, will I? But I did. And so I started structuring portfolios and I became a portfolio analyst and then changed groups. And then I started structuring for the managed futures area. Those are managed commodity funds, like you have, kind of like you have stock funds. So I went there and I was the analyst. And then I looked around and I said, wow, the salespeople seem to be having a whole lot more fun. And so I'm sitting here crunching numbers, they're whining and dining, and I'm sitting here. And then I went on to become a salesperson. And in lesson number 2, I said, I want to be a salesperson. So I asked my boss, I'd like to be a salesperson. And he said, and sell commodity funds, he said, it's a man's job. This was, a long time ago. This is in the 90s and mid to late 90s. And I said, well, don't you have a region that's uncovered? The salesperson just quit. And he said, yes, the South. And I said, well, I mean, I'm not a man, but surely I'm better than nobody. And he said, okay, yes, I'll give it to you. And I said, okay, well, better than nobody. Nobody's covering the region. You've got no one. And I said, but at the same time, like, let's negotiate my pay while I'm going to do this. I said, I probably won't make any money. So why don't we do a commission deal? And that's when I started making money. He said, okay, I'll give you this commission deal and this, then I started covering my region. I would just went at it. I actually helped because I understood portfolio allocation and diversity. I restructured the whole sales presentation for them. And he was really impressed. And then he said, okay, everybody use the presentation she's been doing. But I wrote that presentation. I knew how to give that presentation. That was mine, okay? And I may have helped everyone else, but nobody could outsell me. And I made that little southern, I went and I got in my car and I'd drive because I remember going through Alabama, I'd be going through Mobile and Birmingham and anywhere. And I have to say I enjoyed it and went all over areas of the US, but a lot of times alone, I'll have to say, just driving from different clients' office to different clients' office. And I enjoyed that. Maybe part of it was being a military child really helped me sort of with that. But so I went there, I went to sales, I understood what the financial advisors, they were my clients. I didn't deal with end clients so much. I dealt with financial advisors. So that's going to be something we're going to talk about later, choosing a financial advisor, that sort of thing, if that's what you want to do, the route you want to go or not. And so I worked with them, and then eventually I became the head of international sales for Prudential Securities. And then I interviewed with Scudder Threadneedle in London. They were under at that time, and they did the interview, and it was for equity funds and bond funds. And then I ended up doing it. I didn't actually want the job, but they decided they wanted me. So that's sort of in a nutshell. And again, working with pension funds, working with stock brokers, financial advisors, every sort of kind of fund there is, and then eventually started my own firm, and then sold it, and then but spent 20 years doing this. So, and different aspects of it, not just your traditional I'm a portfolio manager aspect, but all the aspects. And I also myself am an investor.
And obviously, Maddie also invests her own money. And, she's very savvy with finance, which was one of the reasons why I thought maybe we should touch on the subject of finances, because I never knew a lot about finance until I would say about 10 years ago. So I started life as a model. That's what I did all my teenage years into my early 20s. And I remember then I started my first business. And for the first time in my life, I realized that, wow, you can actually make money by getting other people to give you money rather than you giving other people money. And I know you might think it's simple, and of course it makes sense, but I think, when you're young and you just spend your whole life buying things, like going to the shop and doing this, you don't realize that there's an other side to the equation of people that are actually creating those businesses. And when I started my first business, the first thing I realized was like every penny you spend is going to someone else's business, be it the government, be it your gas bill, be it your energy bill, be it the chocolate bar, the water you buy. You're actually giving it to someone else in exchange for something. And after I started that first business, I thought, I want to be on the receiving side, not
Well,
the giving side.
I would say my thought. Well, I remember when I first stopped living paycheck to paycheck, and I really did in New York. It was, and then I got my big bonus, and I started getting commissions and this and that. And I wish all those years ago, I actually didn't just fritter it away. Which I'm going to be honest, I did. I said, okay, I want to do this, and I'm going to do that, and I'm a spender, so I get it. You have to. Here's the thing: I wish I knew then and how to.
Exactly. So I think at that stage of my life, so after modeling, I then went into kind of study. I got a degree, I did a master's, and then I worked in production for a bit. But all through that, I was starting businesses, I was creating wealth. And I realized there's an equation in life which a lot of people don't understand. And I know sometimes it can be difficult because, you are just working your 9 to 5 and you don't really get it. You don't really get.
Tell me, I'm waiting.
You don't really get it because sometimes, it takes sitting down and really understand the financial balance of things and how, as you say, if you do the right investment, it can equal future freedom. And you do it, and especially when you're younger, because we talk about that, like when you're in your 20s, early 20s to 30s, it's the best time to, which we'll talk about later, to save money, do all those things. So going back to the purpose of the show, one of the reasons we decided to do If You're Being Honest is we want to call you to action. Are you really being honest about the topics we're going to talk about? Are you really being honest about your finances? Are you being honest about your relationships? Are you being honest about where you are in life? Or is it time for that rain check? So I think over the next few minutes, 30 minutes maybe, we'll be talking about a few subjects that might rub you the wrong way. But trust me, they are important to talk about.
Absolutely. I remember being my early jobs in my early 20s and having to ask my mother for money because I couldn't pay my phone bill. And the way I have a Taiwanese mother, and she shouted at me, and she gave it to me, and she said, "You're so irresponsible. You're gonna," and that whole tiger mom thing that exists. She's not shy with the insults, and you're gonna be a loser, and you're gonna be this. I was like, oh. So from then on, I was like, I really don't want to ask her for money. I mean, really, really don't want to ask my mother for money. It wasn't worth it. But that was enough to motivate me. I think she was very skeptical when I said I'm going to go to New York and I'm going to get a job and I'm going to work. And I guess I even surprised myself. But there's some things that I guess helped me start from there. Where my father, very early on, we had to be on time. He's a military man. He would say, "Okay, we're going to meet at 0800." He really did say 0800. We met at 0800. You were not late. If you were supposed to come home and your curfew was to be 11 p.m. or midnight, you met that curfew. And if you didn't, there was consequences. Not terrible ones, but you'd get your phone privileges taken away or something like that. And I think that did set me up. And if you're here and you have children, teach them that. Because when you go to work, because to save money, you got to make money. And when you're making money, make that money. It may be a job, it might be even a meeting, it might be anything. You got to be on time. You have to. And that's like life lesson one. Be on time. Be prepared. And I would say that he gave me. And let's start there because that is a basic thing. If you are somebody who constantly runs late, you got to kind of trick yourself so you can give yourself extra time, give yourself anything you need to do, but be on time.
Yeah, I mean, that's a good lesson, Maddie. But, because we're talking about finances in this first series, I mean, one of the things that I think most people don't realize is how important finance is, how
Mm,
finance actually is intertwined with your life. What you have, your finances depends where you live. It depends what you can do, whether you can go for dinner tonight. It dictates how you live your life. And most people want to work to earn more income.
yeah,
But even where you are at now, there are simple things you can do
absolutely.
to, probably earn more income, but also with the income you have to save it and invest it properly for the future so that, the slug is only like the next 10 years. And after the next 10 years, it becomes so much easier and your life opens up because you've invested properly 10 years ago. I mean, now I wish I knew some things back then that I know now, but hopefully we can give you guys at home the knowledge, and you can use that and progress
Absolutely.
forward.
Absolutely. I feel exactly the same. Things I wish I knew. I don't spend a lot of time looking backwards because I think there's no happiness in looking backwards. Anyone who's reading anything about life's happiness, so don't beat yourself up too much. I try not to, but yes, I wish there are things I had known that I had done or I would have done differently. Um, and I was in a job interview once, and they asked me, "How important is money to you?"
Mm.
I said, "Wow, it ranks right up there with oxygen." And I got the job. They were like, "Oh, okay, good." It was a banking job, obviously.
Uh-huh.
And, but and then I see I'm gonna go back to my father just recently because he's 86. He had heart surgery a couple years ago, and he could afford the best doctors, and he's living a nice life. I'm not saying that it's not without its stress and, getting older has all kinds of health things, but he can afford things, and and he can afford to help his children and give them things and help me. Like I'm still a child, but but or his grandchildren. And, I see that the freedom, and it's so we want that in our older years. We want to have that to be able to travel if we're lucky enough to be healthy enough to go places. He worked hard and he worked a long time, and he's been able to help his family to achieve
Exactly.
things.
So Maddie is the investing guru here because, as she said earlier, she was an asset manager. So she's got a vast wealth of experience on that side. What I'm good at is building businesses and helping people, I would say, create life plans and inspirational, transformational plans for not only their businesses, but for their lives and to help them achieve their goals. So, over the next few episodes and series, we'll also be delving into relationships and that type of stuff, which I'm sure a lot of you want to know about. But that said, I'd like to ask Maddie, what are the principles of investing? Where does someone start now? Like, if someone was, you know, working a 9 to 5, earning a decent amount of money, or not even earning that much, where do they start?
I think one of the very first places to start, whether you're working, especially if you're working at any job, I think almost all of them, it's the law that if you have so many employees, you have to provide a pension, okay? And everyone's saying, well, it's so little, even they're taking 20%. Yeah, but that money's tax free. So already you're up 30% or whatever, 40%, whatever it is, start. And the younger you are, you start, it adds up, it compounds. It's like, and you get it. Some companies, and if they say they match what you put in, match it to the limit. As much as you can put in, that money is tax-free and it's compounding tax-free. Okay, so you're already up 30%. You give me an investment, you say, okay, most people would be thrilled to get 30% or 40% or whatever. Just let it sit there. And that's the first step. You sign up. You got your job. Even if you have a job now, you go and say, hey, what's our pension thing? Let's start now. I'm going to put the maximum I can put, I can put aside, put that in there. Oh, do you match it? Oh, that's great. Let's do that. And then you set that up. Then you say, okay, well, what do I invest in? Okay, I started the pension. That sounds great. But what do you, they should offer you, most employers will offer you, certain options, and they should be the simplest way, and definitely do this, is a low cost index fund. You can get the low cost stock market indexes, an international index. If you're in the U.S., you want to do a U.S. stock market index. If you're England, you want the FTSE, whatever you want. I usually recommend people just do diversified indexes, or just one or two different stock market index, one emerging markets, one developed markets, that's it. Or they may do it for you. They'll choose a pension fund provider who will do that for you. But low cost indexes, they compound. I think, over time you would be surprised, and because they're quite diversified. You say, okay, well, maybe I want to buy Apple. I know Apple. I want to buy things I know, and that's great, and that's a good way to go. You may or may not be able to do that, but I do recommend for starters to just do, and even advanced investors to do low cost indexes. It's hard to
And
outperform the stock market over time.
yeah, that's really good. But, the thing about it is also you have to think about, a lot of people don't have a clue about how to start investing in the first place. They've never invested before. So, when they think about investing, they're like, oh my God, where do I start? And even I know, because after living in America, which I think America was the first place where they started all the apps where you could download a brokerage account and literally invest within 10 minutes. You could download a brokerage account onto your phone, upload your ID, and within 10 minutes, you could put money in with your debit card. And a lot of brokerages now are offering what they call fractional shares.
Yes.
So even if you can't buy, I think Apple is at 253 now or something, even if you can't buy a whole share of Apple or whatever, you can divest and you can buy a fraction of it. You can buy £10 worth of that share or whatever. But as Maddie said, I think, index funds are great, especially when you first start investing, because you don't have to think about it. You just have to.
You don't want to tuck it away.
Yeah.
And the average holding of any investment in a pension fund or retirement account is, I think, 7 years. Might even be longer. That 10 years. You tuck it away. You don't think about it. And that's why with an index fund, you don't have to worry. Is this stock going? Did the CEO get fired? Is there some scandal? Did they get sued or whatever? You don't have to worry any about that. You get to choose the top, whatever thing, 500 companies were the S&P 500, for example, and in the US, you get to just, they work for you.
Yeah, but that said, okay, so something, we're talking about investing.
Right.
And one thing I never did, and you're all going to laugh right now, one thing I never did, and maybe I'm just starting to do that now, is, I hear this thing every time where people say, you need an emergency fund. And I'm one of those people that just think the money will appear miraculously out of thin air. And, like I know in America, they say you should have at least $10,000 in your account in cash, liquid, for an emergency fund.
Wow.
Here in the UK, I think everyone should have I would say at least £5,000 to £6,000 liquid, in your account, because if there's an emergency, you have cash you can get to.
Most people don't have that.
I know that, because in America, the statistics are, is it 60% of people
are one paycheck away from homelessness.
Homelessness, yeah. And more than that, I think it's actually 90% of people, or 80% is one paycheck away from homelessness, but 60% of people have only less than 1,000 in savings, or in case of an emergency.
Another reason why you want to take that money and start even your whatever job you have, every job you have, and then you consolidate it once that you leave the job, and you can move it to one account. But every job you have, you just put that money in your pension, your savings. Now, I think you can borrow against it, so you can go to your bank and you can post
borrow
as
against
collateral.
Your stocks.
Yes, yeah. If it's in the U.S. is different from the U.K. In the U.S., I think you can. If you have, like, for example, a Roth IRA or something, you can liquidate. There's steep penalties to pay. I don't recommend doing that. In the UK, you cannot.
Yeah.
You
and
cannot
borrowing against your
money.
Stocks is called margin, isn't it? A margin?
No, I'm talking more about you go to your bank and you say, I need an emergency.
Yeah, but they give you a margin against your stocks.
That's a stock trading account. That's a little bit different.
Oh, yeah. Oh, you're just talking about borrowing a loan?
Going to a bank, yeah.
And just getting a loan.
Exactly.
So
if you're in an emergency
but
and you need money.
But in the UK, I doubt if they'll give you a loan. It's very hard for people to get loans in the UK. Very tough. Unlike America, where people do get loans, but not. In America, people can walk into a bank and get a $10,000 loan. In the UK, they're more frugal with how much is borrowed, both on credit cards and on loans.
I remember when I was in the UK, I did get a loan once, and it was was a wonderful bank manager at Lloyd's. This woman, I wonder where she is today, and she kind of.
And those were the good old days where you could talk to the bank manager. That's another thing we've got to talk about in one of our episodes, about the fact that in today's world, you're dealing with all this AI and computers. There was a more personal relationship back in the olden days, where now it's like something goes wrong and you're just stuck in this loop
Yeah.
of AI and call centers and
I understand this completely because
yeah.
I was trying to call the HMRC because they took taxes out the wrong amount of taxes out from I was taking some money out of my pension and they charged me the wrong tax rate and I was trying to get a refund. And just to even call and find the number and then it's voice messages that I don't know if you know this is interesting too, but when you call a company, for example, to complain, let's say you Thames
Hmm.
Water or BT or anything for a bill, they usually keep you on hold, or airlines or whatever, for a long time because they know the average amount of minutes that someone will give up before they file a complaint.
Oh God,
So that they'll
no.
put that they'll set the waiting time longer so people don't actually have time to file a complaint or something because they purposely do it. And you said to me once in a recent conversation, she said, "I'll just hold. I'll just put the phone. I'll do my thing. I'll leave. Do that if you need to make a
Yeah,
point."
that's what I do
And.
basically. When I'm calling one of these people that keep me holding, I just basically just put it on speakerphone and it's
Me
my
too.
background music and I am cleaning my home, brushing my teeth, putting on my
Me too.
lipstick until they pick that phone up because I'm not going to, because in the beginning I'd sit down and I realized I just wasted 30 minutes waiting for you to pick up. And I'm like, you're not going to waste my time. I'm going to carry on doing what I'm doing. And when you're ready to pick the phone, we'll have a conversation. But that said, Maddie, we were talking about, what is the foundation? What would you say the foundation is? I am 21. It's my first job. I'm not earning so much. What is the foundation of my investing? Where do I start?
As I said, everyone, whether it's even everyone from 20 to 30 to 40, or even if you've been in working for a while, you're 50, doesn't matter. You start with your pension fund, okay? That has to be in every job you have. You sign up for that pension fund. If they match it, you get them to match it. You put the maximum amount of money. That's where you start. Now, more often than not, they'll choose the investments they make for you. They may just say, okay, and that's what happens most of the time. And they'll put it in stock market indexes or they'll put it in their own whatever managed fund and do it. I think I had one with Scottish Widows when I was in it. And they do usually a pretty good job, I have to say. They let them do it for you, okay? They'll do
Hmm.
it and they don't say you go manage your own money, okay? But
Hmm.
but so let's start there. So I happen to have an account with St. James Place Capital that does my pension money. And they want to use their own funds. Now, I'm not a big fan of this. I believe that, and I'm kind of getting advanced, but that you should be able to choose your funds. Now, this is really intimidating. I have friends who've gotten a divorce. They have some money. They don't know. They're like, where do I? That's a different side of money. I don't even know how to invest. I don't even know where I start. How do I choose a fund? Okay, so I'm a big believer. Let me just say this one more time because this is really important. I'm a big believer in low cost stock market indexes. Okay, I'm a big believer in that. Now, the younger you are, the more risk you take because you don't need that money for a long time. So I was helping a friend with her investments for her daughter. Daughter came into some money, and I said, and they put me on. I think it was ABN AMRO that was managing it. I was helping her choose a financial advisor, and we're going to talk about that later. But so I helped her choose. I was interviewing them, and then I went and looked at the portfolio. I said they didn't do a thing. I said, and I went and looked through it, and I said, okay, low cost indexes. Of course, they want to put their own funds because they make more money. And then I said, when I looked at the fund, I said, why this fund? I said, what is your track
Hmm.
record for a 1 year, 3 year, 5 year window if you can get it? And I said, she can take risk. She's 21 years old. She's not going to need that money for a while. She's not in a high tax
Hmm.
bracket anyway. She's just starting out, getting her first job. I said, first of all, the younger you are, the more risk you take. What is risk then? Risk is I'm going to invest in the stock market. I've got my fund. And I said, 80% should be in stocks. If we want to be very simple, this is a high risk portfolio, and 20% in bonds, or maybe 15% in bonds and 5% in alternatives. Bonds are typically safe, especially if you're doing federal bonds, very safe bonds, government bonds. Okay, and there's just funds that do it. You don't need to choose the bonds. You don't need to choose the stocks. You can just do this all in indexes and sleep well at night. And you can ride out. If you're young, you don't need that money. You can ride the wave, what we say. You just keep riding that investment. You can ride out the dips. Okay. The stock markets will come back. I mean, eventually. If you're 21, that's what I'd say. low-cost stock market indexes. You don't want to lose your money to fees. You don't want, you say, well, I'm just going to save because I'm going to need that money. I'm going to leave it in my savings account. No. The inflation rate is higher than the bank's paying, so you're actually losing money. If you just leave your money in your savings account, that doesn't make sense. Okay.
So the main thing is we've got to, what Maddie's saying is low cost indexes.
Yes.
Have a safety net. So if you're working, probably try and save about £2,000 or £3,000 first in cash that you have saved. That's in your savings. And then everything above that, start investing. So you have your cash, your emergency funds. So also in a way, that prevents you liquidating your stocks every time you need extra cash.
Well, you can't once you start the pension funds, and it's not easy.
But that's the pension funds. But also, I'm talking about
funds.
that's retirement funds. But also, people want to invest in stocks with their cash sometimes.
Right.
So when they're doing that, I'm saying you need a safety net first.
But what I'm saying is, it's better to do it in a retirement fund because you're saving 30%.
In England, they don't allow you to put more than there's a limit to how much you can put a year. Even in America, in the retirement funds.
Okay, but if you're going past that limit.
But a lot of employers don't allow you to put extra.
Well, that's what I'm saying. I'm saying our starting point, and that's where we are.
I know. But what I'm saying is when they want to invest in stocks themselves, always, because the first thing is they have to have a safety net. You have to have a safety net of cash. Otherwise, there's no point investing, because if you don't have the safety net of cash, every time you need money, you're not going to invest. You're going to spend it.
Absolutely.
Yeah. So that's what I was talking about.
Absolutely.
Yeah.
So I would say, because I think we're step one, take full advantage of any retirement.
Exactly.
That's step one. Step two, if you have ideas and you want to, and that brings us to the second part, which is actually really good. We want to say, okay, great, I got that, but I've got even a little other extra money, and I want to open a stock brokerage account because I think I want to invest in Apple or cryptocurrency or fractional shares and all those sorts of things. That's fine. I'm not a big believer in that. Having said that, and I remember the late 90s, I bought Amazon, and I think it doubled, tripled, you kept splitting and this and that. And everyone's saying, well, I said, I don't know, I just used it. I wish I'd kept it. And that's the problem when you invest and manage your own account. You're buy and hold, buy and hold, buy and hold. Every time, if you trade shares, okay, you're going to lose. You're paying the commissions every time you have to trading them. And the best really way to do it is to buy and hold.
Yeah, but I know that. But what happens to a lot of people is they want to trade the shares. They've got money in the pension, but they still want to have a savings that they know that they can either get margin on, or that it's available, because with pensions, they're frozen until you're a certain age.
That for a reason.
Yeah,
because
which is good, but sometimes people have emergencies in life where they need, so they have the pension savings, but they should also have other savings pots, like a stock account or brokerage account where they can have access to, because otherwise they feel like you've got nothing. This is what I'm talking about.
Yes, but here's the other thing, and if you so you're saying you have like something for a rainy day.
Yeah,
that's good. But that doesn't necessarily should be a stock account, because
that's why I said cash first. I said the cash first. But I'm saying if they have more than that cash and their pension is already filled, what you find is people that have the cash, they've already done their pension, but they have extra cash, so they wanted to make money. They don't just want to leave it in cash, so they put it in a stock account.
I would say, first of all, the most important thing to do is pay off your credit card debt.
Yeah.
I mean, don't
Exactly.
leave money in a rainy day, because your credit card debt interest is huge. It's huge. So pay off that credit card debt.
That's very important. So you learned a lot of things in this episode, and we did some touches. We haven't gone into the deep stuff yet, but we will be. So we touched on the finance. We did a lot of outlines about finance, and the number one thing is pensions. Match your pension, have your safety net, pay down your credit cards, and I think in our next episode we'll be breaking down the financial basics, but also talking about a lot more about the emotional relationship of it all, because that's a very big thing. Because you would wonder why everybody knows what to do. Everybody, I mean, most people I know, they know they should save, they know they should keep money, but there's an emotional relationship with money. And a lot of it depends on that emotion, the relationship you personally have with money.
That's different. You
Yeah.
can't change that. So
People can change that. That's something
Really?
that can be changed. Yep.
I hope so.
Because people have different relationships with money, and that's a psychological thing.
Yeah.
It's like you have some people that just hoard it. They don't spend on anything. They wouldn't even buy themselves. They'll have holes in their shoes. And then you have people that spend it all. It's all psychology, and it's all the relationship they have with money.
Well, you're very generous. I would say you're a very. She's just a really generous person.
Yeah, I'm generous because I'm generous to myself, and I'm generous to the people around me and people I care about. And I think generosity is something everyone should have, because I also believe that when you share, you receive. It's just a thing. But that said, I think I'm also a spendthrift. So just so you know.
Okay, so the takeaway from this, and I would say everyone who's listened, if you've gotten this far, even if you work at McDonald's, even if you're anything, it doesn't matter. Even if you're there and you don't ask, and a lot of us who, which she's mentioned, aren't really great savers. Okay, then let the company you work for, or you're even go do it for you. They will and match it and do that. Just start there. There's a quote I often use when I procrastinate. I don't start. I mean, go call your HR department wherever, or talk to HR, or talk to anyone at your company and start. If you start something, just that first baby step of starting is you're halfway there already. So start, and that's your takeaway.
Yeah, and thank you for watching our first episode of If You're Being Honest. I hope you're entertained and you've got a lot more tips on how to save your money. But we'd like to hear from you, so don't forget to like, comment, and subscribe. And you can always reach us if you want to talk about something. You could email us at info@ifyou'rebeinghonest.com. So until next episode, it's bye from me.
Bye.
Bye.
Thank you for joining us.